Well, I think it's very interesting. The economists tell us the world's okay and that we'll see some good growth next year. But the stock markets are certainly telling us that it's going to be a difficult few years because they're always a very good forward indicator, as you know. So yeah, it's going to be tough, I think. But yeah, but there's good value out there now. India, especially. ASEAN we really like, so those sort of markets are looking increasingly attractive.
So I'm going to talk about India at length in just a bit, but are you going to see a lot of money flow from DMs to EMs? I mean, there are more EMs growing at 3% plus than perhaps the developed markets. Will we see more asset allocation happen there? Are you going to turn more pro-EMs in 2019?
Well, you're right. Theoretically, we should see people putting money from developed markets growing at 1 and a bit percent to emerging markets growing at least 3%, but I'm not sure we're going to see it in the short term. So I think, though, the good thing is people will keep their asset allocation in emerging markets rather than sell down, because I think they're weathering the storm pretty well.
What would you say about the Chinese equity markets? I mean, down 20% in 2018, but isn't that normal? I mean, for an economy that has a base of $14 trillion, it couldn't have grown at 7.5–8%.
I know. I mean, I think to expect an economy of the size that India's becoming to grow at 7+% is just unrealistic. So I think I think China looks fine at growing at 6 or whatever, and you know, they always say that even if China didn't export anything, it would still grow at 5% just on domestic growth.
Yes.
So I think it's okay, especially the A-share market. We think there's some really good companies there, and one of the issues we've always had with India is finding the companies to invest in compared to India, and that's certainly the case. We're finding some really good quality businesses now to invest our clients' money in.
So there are a lot of hopes, and I'll talk about India and then perhaps ask you a last question of Brexit, because you've got your skin in the game there. There is a riding wave of hope that after a 5-year hiatus, corporate earnings could be turning more profitable and likely to improve. Do you see that happen, in this year and perhaps the next?
Yeah, I mean, I think, look, India's always been our number one choice in emerging markets and has been for a long time. We've always been worried about valuations, that the valuations have been higher than other areas, but that's been because the companies are such good quality. So yeah, no, we do. We're still very positive on India and the companies we own, and as you know, on our own balance sheet, we own a significant share of HDFC Life and HDFC Asset Management.
True. Yes.
So still very positive on India.
So obviously a quick question that has to follow up on India is that this is an election year in India. We've seen a very robust rally of sorts between 2013 and 18. Some of that got petered out in 2018. Do you believe valuations perhaps are far more realistic today, and does that make the market more attractive for
definitely.
you?
The market, the valuations are more attractive than they were. As I say, we've been worried for some time about the valuations. So I think the good thing is that they're down to much more realistic levels now that we can invest in.
You know, so the Modi government has done a lot for the markets in terms of reforms and things like that investors have liked. But in an election year, there is always this temptation to turn populist and to have out-of-the-box measures in terms of which will perhaps mean some drain on the fiscal positions. Are these things that cloud the mind of investors like yourselves?
I don't think so. I mean, I think that what we've tried, we always, wherever we invest, try to disregard what's happening in the political arena. So you're right, this is going to be an interesting year in India with the elections, but I think the companies will still continue to do very well, and so we're still very hopeful on India.
So will most of your investments in India be irrespective of the political coalition? Do you believe, irrespective of who comes to power next, the reform agenda is here to stay? Are you as optimistic?
Yeah, I am. I think the Modi government has done a very, very good job. I mean, inevitably, there's a lot of euphoria when they came in.
That's right.
And of course, it's always overdone, the euphoria. So But I think, look, generally they've done I think he's done a good job, and I think really sort of changed India as well, and I think inevitably it'll continue on.
Fair point. Let's just talk about pure play markets. Which is the end of the market that you like right now? Is it the the more expensive, the consumer play? You're obviously invested very heavily in the financial space, which is HDFC and HDFC Life. But are there any other pockets of the markets that excite you right now?
Yeah, I mean, look, we're long term. We tend not to change too much. So we do like HDFC. Because we had our own holding in HDFC Life, we couldn't take part in the IPO,
That's
which
right.
was very frustrating for us. But look, we like Unilever Hindustan. I mean, it's been a sort of a stalwart of ours, a cornerstone of our portfolio for many, many years. So it's a great business. We like Hero. So we as always like a spread in the market to spread our risk. But look, we're that end of the market, we're still positive, the large cap, but increasingly we're looking for good value in the mid and small cap markets as well.
So what sort of companies are on your radar when you say mid and small cap? Because somehow people are very wary of that segment, because whenever there's a correction, those are those stocks are really at the Brent and the receiving end of corrections.
You're right. That's why you've got to do your research, and we never invest in a company unless we've visited the management, etc. But of course, the large caps are really, as you say, the bread and the basis of the portfolio. But increasingly, we'd like to look more for the mid and small caps that offer really good value that we can invest in.
And
for
which
the long
segments
term.
of the economy would
Just the same, the consumers, banks, the financials. Obviously, they tend not to be in the small mid-cap, but technology as well. We like those sort of sectors.
Fair point. If one has to look at a portfolio as far as a 3 to 5 year view on India is concerned, and given the fact that there's a lot of emphasis on India becoming a $5 trillion economy by 2025, what would an ideal portfolio for the CEO of Aberdeen be?
Well, I think it would just be much the same as it is today. The Unilevers, the HDFCs, those sort of the Heroes, those sort of companies, because they've been really, really well. They're well run. They've got good corporate governance. They've got good management, and that's what we're really looking for.
I was going to ask you that question. When you look at your investment strategy, what are the top 5 boxes that an investment has to tick?
Well, I think the first question we ask, first of all, is will the management team look after our interests as a minority shareholder? And if they don't tick that box, we don't really go on to any of the other boxes. So then we just look for conservative balance sheets, no big gearing, good cash flow, good strategy, all of the sort of things. We're really very much at the conservative end of the market, which is why, of course, we've done so well recently, because value stocks have come back into vogue.
We started off this interview by you saying that there is something that the markets perhaps are more wary of than economists are, and I want to go back to one of those factors, and that's Brexit. You someone who comes from that region, how are you seeing the whole Brexit unfold? Is it markets seem to be taking it in their stride? How come?
Yeah, I think because from day one, financial services prepared for a hard Brexit. So we already have subsidiarized businesses either in Dublin or Luxembourg or Frankfurt. Certainly manufacturing, that's probably more problematic, especially the SMEs, because they have not prepared for a hard Brexit. So my view is, like all these deals, it'll be done just before the 27th of March. And the other option, the only other option the UK has, is really to withdraw Article 50, which it can do under its own.
Yes.
It has the power to do that. I think they'd be reluctant to do that. So I hope something gets agreed.
But
and it all centres around this Irish border question.
Exactly, yes.
And it is sort of ironic, isn't it, that that actually all that the UK, the Brexiteers want is a backstop date And it seems quite easy to give that, really.
Yes.
For those sitting around globally looking at it, I think we all sort of think this looks easily solvable. You just need a backstop date.
But arriving on that consensus is just the toughest part to do.
Well, I think most of Europe would probably, with the exception of Ireland, would probably. I saw Poland had broken ranks yesterday,
yes.
so I think most of them don't feel that this is a permanent arrangement, and so a backstop date would seem sensible.
Fair point. But do you believe post the Brexit there will be space and room for better trade deals between UK and the emerging markets?
Yes, I do, because I think it'll focus the UK on. It'll focus it globally, and needs must to a certain extent. They'll be forced into doing bilateral trade deals around the world and concentrating on the rest of the world as well.
Martin, a quick last question. If you had that last pound or a dollar left in your pocket and you had to invest it in the most profitable venture of your life, a stock or any other thing, what would you and where would you put that money in?
Well, I've always been a great believer in emerging markets and Asian markets, and I like India, I like ASEAN, and I think at the moment great value as well in UK equities.